Good morning and welcome to the LNG Marketplace Weekly News Flash. Here's the latest news we have selected for you from all over the media. After killing off top Iranian general by US airstrikes in Baghdad, many are concerned that Iran's retaliatory act could take place in the world's largest oil choke point, the Straits of Hormuz, and that could push LNG prices on the spot market higher. Analysts believe, however, that in the unlikely event that any disruptions to Qatari LNG exports, the global gas market could cope, as the LNG market is currently oversupplied. It is more likely that the LNG shipping market itself could be impacted, though. If a number of LNG carriers should be trapped in the Gulf for any length of time, this is likely to increase the currently already high LNG vessel shipping rates substantially. This piece of news we read on globalnews.ca, S&P Global Platts, and oilprice.com. According to TradeArabia.com, global LNG production jumped in 2019, the largest ever increase in production, triggering oversupply and low prices that are expected to persist in 2020. While East Asian, especially Chinese demand, increased in 2017 and 2018 to absorb additional production, there was little change in 2019. Instead, supply pushed into Europe reached a record high, having a major impact on regional hub pricing, with price correlations growing between Europe and Asia. Intensifying competition between the United States and Russia is driving record-breaking LNG imports into Europe's most liquid natural gas trading hubs, with the rivals accounting for more than half of December's volume shipped to these areas. Amid geopolitical tension over Russia's pipeline supply in Europe, the US now faces additional economic pressure from growing LNG production originating in Russia. Coming in third in terms of exports, Qatar is a latent challenger to emerging duopoly. This we have read on S&P Global Platts. Asia's spot prices for LNG were little changed this week amid quiet trade and low liquidity. A new gas transit deal struck between Russia and Ukraine last month, which will see Moscow supply Europe for at least another 5 years, has eased market concern about gas supply disruptions. This is stated by AODigital.com. According to S&P Global Platts UK, imports of LNG may have permanently altered the fundamental natural gas supply picture in the country, with 2019 regasification showing a dramatic 169% year-on-year increase, and consequently slashing average NBP spot prices by half. With considerable LNG regasification capacity, one of the highest annual natural gas demands requirements in the EU, a lack of long-term global storage, and extended means to export to mainland Europe, the UK is now a key target market for global LNG producers. The prognosis for future LNG exports to the UK is also incredibly favorable. S&P Global Platts has decided to change the fuel assumptions used in its LNG freight route costs, effective January 2, 2020. This decision is based on market feedback highlighting recent changes in fuel usage on LNG carriers, in part due to incoming IMO 2020 rules, but linked also to more competitive LNG prices. This is stated by Hellenic Shipping News. On the same website, we read that shipbroker Affinity has facilitated its first trades in natural gas freight future contracts. The trade involves French energy major Total and commodities trader Trafigura. The contracts offered by CME Group are based on the assessment of 3 LNG shipping routes that the London-based Baltic Exchange started publishing in 2019. In a new development, the federal government has approved merger in 2 state-run LNG companies in Pakistan. Both of them deal with LNG and will be merged into a single entity as an autonomous body. According to a senior official, this new entity, after the merger of 2 companies, will later be merged into Pakistan State Oil. This we found on thenews.com. At present, several parts of Pakistan are facing low gas pressure of zero supply situation with a drop in temperature across the country. Different sectors of the economy, such as power plants, CNG stations, fertilizer plants, and textile mills, are facing huge production losses due to the gas shortage. The gas crisis could have been averted if more LNG cargoes had been imported in a timely manner. Pakistan needs at least 3 or 4 more LNG terminals to address its ongoing energy shortage. This we found on Hellenic Shipping News. Bulgaria will buy 20% stake in LNG terminal of northern Greece as it works to move away from its almost completed dependency on gas from Russia. The United States and Qatar are expected to be the main suppliers of LNG for the facility. The LNG terminal will aim to supply to Southeast Europe via the interconnector Greece-Bulgarian natural gas pipeline. This is dated on Ikathim Marina. Qatar Petroleum will supply Kuwait Petroleum Corporation with liquefied natural gas over 15 years starting in 2022 as the Persian Gulf country seeks to rely more on gas for power generation, as we read on S&P Global Platts. And last but not least, with the final investment decision taken on the Nigeria Liquefied Natural Gas Train 7 less than 2 weeks ago, Nigeria is on course to become a leading gas nation, states Punch.com. That's it for this week. Tune in next week for more news, and until then, thanks for tuning in.